let's talk hospitality itself. Our guest on the show today is Mahindra Holidays and Resorts. Posted a strong set in the fourth quarter, and it was led, of course, by the turnaround in their European business. Kavinder Singh, who's the managing director and CEO of the company, joins in. Kavinder, always a pleasure speaking with you. And over the last few conversations we've had, you have said that, European business will turn around in the fourth quarter because it's a seasonally strong quarter for them. And turnaround it has. It's posted an EBIT of close to 50 odd crore rupees versus a loss of 16 crores in the quarter. What I wanted to know is, what's a sustainable number here? In a strong seasonal quarter, you've done an EBIT of 50 crores and revenues of close to around 400 crores. Going forward, what's the quarterly run rate we should expect here?
You're right. The Holiday Club Resorts has indeed turned around. And, Q4 is typically a seasonally strong quarter. But in this case, the Finnish operations surprised themselves because the Britishers, Germans, Dutch, they all came for the skiing in the Lapland season, Lapland area of Finland. And this time, we saw a big movement in timeshare sales growth by 57%. Spa hotels grew by about 19%. And in the quarter, they delivered an EBITDA of 6.4 million euro. Now, this is an extremely strong performance, considering the fact that there is a war going on in Russia, Ukraine, considering the fact that the inflation is high in Finland, and considering the fact that the consumer sentiment has been low. However, the silver lining here is that the timeshare sales in Finland are doing well because the Finnish love second homes, and they are not in a position to buy second homes because of the higher interest rates. So we see good times ahead for Finland because structurally they have reduced their costs. Looking forward, which is your core question, actually speaking, Q2 and Q4 are seasonally high quarters. Q1 and Q3 are not very seasonally, they are not seasonal quarters, if I may use the word. But structurally, we see significant changes that have been done in the Holiday Club Resort operations, which we will begin to see the results. And I'm pretty confident that the full year performance of Holiday Club Resorts is going to be significantly better than what we have delivered this year. So there is the turnaround which has started, and it is quite visible to all of us.
All right. Hi, Mr. Singh. Good morning. Thanks so much for joining. And well, your occupancy, I think, for the past quarter was in the vicinity of around 84%. So could you tell us what's the number you're looking at going ahead? That's point number one. And member additions, what's the target? Where do you end FY24 at?
All right. So the good part is that this occupancy that we delivered on 84% is on the back of about 1,200 rooms that we added over the last 2.5 years. So we have been brisker in our room additions. We are closing the quarter at the year at 4,940 rooms. And despite that, the occupancy was 84%. As we keep moving ahead, the rooms will keep coming in. And we are looking at April, May, June occupancies upwards of 85%. The business on books is very, very strong. As far as the FY24 member additions are concerned, you have already seen that we have crossed the 5,000 mark in the quarter four. Quarter four is generally a good, quarter for member additions. Of course, we still grew by about 25% over the quarter four of last year. We are looking at good times ahead from the point of view of the fact that we have made significant progress in our channels of acquisitions, whether it is digital, whether it is referrals, whether it is on-site sales, and our focus on tier 2 and tier 3 towns, as well as corporate sales. So I think the member additions are going to be robust as we move forward in the near future.
All right. Just wanted some color on your member additions itself. 5,100 members you added in the fourth quarter. How much of that was, renewal? What was the renewal rate on that? What was the membership breakup across tiers? You have a lower tier, mid-tier, premium membership, etc. as well. And what proportion of members currently come up for renewal in the next 4 quarters?
All right. In our business, as you know, that we are different from traditional hospitality business. We have about 282,000 members. So in our case, every year the annual fee becomes due. And different members, since they join at different periods of time, their annual fee becomes due at different points of time. So in terms of, we do not use the word renewal. We do see how many people are paying us the annual fee. Obviously, because you've seen the annual ASF income, which has also grown at a year level by about 17-18%. So we are seeing momentum in the annual fee collections as well. If I were to look at the overall numbers that we have delivered and the breakup there, the annual average unit realization, you may have noticed, has already gone up to 4.2 lakhs versus 3.4 last year, which means the mix is moving towards higher and middle tenure memberships. Of course, we do target millennials through the lower tenure memberships. So this average unit realization also includes a very significant momentum that we got in upgrades, which has gone up by 71%.
Right. Another couple of things that I wanted to ask, while your room to member ratio improved from 58 to 57, there's an important mark going ahead as well, because members who join should get rooms. I mean, that's the biggest grouse that a lot of members have in Mahindra Holidays, and which is what explains the kind of occupancies that you have as well. What is your target here? At what level will you be satisfied? I mean, is it 60, 65, 70, or are you looking at a much lower number, say 35, 40? Just wanted to understand that.
The way to look at the overall rooms that we have now about 5,000, roughly 4,940 rooms. We have 282,000 members, and when we do a simple member to room ratio, you'll notice that it has become better at 57. And, despite that, our occupancies were 84%, which means rooms are available at any given point of time to all the members. Yes, sometimes the rooms may not be available in a particular resort, in a particular date, and you may not be even eligible because you may not even be coming in your season. So at an overall level, what we track is that do we have sufficient inventory to satisfy our member demand, which is rising. And I think 84% occupancy gives us significant headroom, considering that we now have 4,940 rooms. And we believe that the way we have actually used the power of digital analytics, and the moment a member comes into the website, there is always availability shown that what is available in the next 15 days, 30 days, and 45 days. So there is a significant, and coming back to the sweet spot, I think we are already in the sweet spot. We used to be at once upon a time at 69:1, which was bad in my view, because that creates lesser opportunities for members to get the bookings. And now we are at 57. Everybody doesn't holiday at the same time, and they don't holiday every year, because they do try to sort of bunch together sometimes. So I think we are already in a very, very good spot in terms of member to room ratio.
Okay, all right. Mr. Singh, also if you could tell us India margins, you told us on the European business for the year you're expecting it to be steady, and you gave us reasonings why Q4 is very good. But what about the India business? What kind of sustainable margins we're looking at?
So I think as far as the margins go, in our business, there are two things that we must keep in mind. When we drive customer acquisition, that our revenue gets pushed into the future. By the way, we added 144 crores to the deferred revenue for the full year basis, which means we pulled out lesser and we put in more, which is by about 244 crores. So our deferred revenue is growing, which means our balance sheet is getting stronger, which means more income in the future, more profits in the future. But however, what it does is that when you are going after the member additions, you could see lower profits or lower margins, because your cost is loaded up front, but the revenue gets pushed into the future. But the other area where we do see sometimes, and this I'm talking about the PBT margin level, not at the EBITDA margin level, where when we accelerate our inventory additions, you do see the depreciation and financing costs coming in little ahead of the time when the occupancy comes in. So if you really look at from these two balancing factors, I think we have done a very decent job in terms of margins. If you look at versus pre-pandemic levels, we are up by about 430 basis points on the EBITDA and PBT level. So that's quite a healthy movement upwards. Of course, if you look at pandemic, our margins were higher because the activity levels were low and income was coming in. So looking forward, I'm very confident of improving the margins even further.
So roughly 13 to 14% in India business is sustainable?
You're talking about the PBT margins, which are about 14.
The EBIT margins that you've reported, yeah, which have fallen to 11.8% right now.
Yeah, that happens, as I mentioned, in Q4 when we chase higher member additions, and when we look at the inventory that came in, and that leads to a temporary dip in the margins. But I'm very confident of returning back to the 13-14% margin that you alluded to.
All right, and finally, this year you crossed the 20,000 members per year mark, right?
We are aiming to get there.
Sorry, say that again.
as I said, we are aiming to get there.
All right. Okay. Thank you so much, Mr. Singh, for joining in and giving us the outlook on the future going ahead. Wish you good luck. With that, we'll step into a short break, come back, get you more on the markets and individual stocks.